That is a market-beating growth rate of free cash flow to equity, which is very, very good. There's no funny business there. They're growing that number of free cash flow. How the market responds to this is the multiple, but underlying the business is profitable. It's making good cash flow. Its earnings are strong. It's got low debt. It's growing revenue. So then what do they do with this money? Well, they buy back shares and they pay a dividend. The share count has come down about, well, it looks about 10% over the decade. So 440 million shares outstanding to just under 400 million shares. That's a 1% annual removal of shares. Fantastic. I've got a free cash flow share yield here, relatively small, single digits. You expect that for a company that's got a growth multiple of 27 times. But overall, I think this is very, very strong. Let's take a look at the forecast and figure out what do we think this stock is worth in the future. And if you bought it today, held it for a decade, what would you make?